Welcome back. Etihad Airways has recorded its strongest ever passenger and cargo results for a first quarter for Q1 2013, with passenger revenues of $900 million, an increase of 19% from 2012, and cargo revenues of $193 million, a rise of 17%. Passenger numbers in Q1 also grew by 18%, rising from 2.3 to 2.8 million. So before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And continuing with the local markets, the Abu Dhabi Securities Exchange has announced that it is enhancing its delivery versus payment model, which the ADX launched back in May 2011 through applying a buyer cash compensation settlement procedure. The new procedure will take effect in May of this year and means that a buying investor will be paid cash compensation in the unlikely event where securities are unavailable for delivery to the buying investor on the settlement date. The move is a key factor for the exchange to reach emerging market status from its current frontier status, along with the Dubai Financial Market and Nasdaq Dubai. The upgrade is expected to bring greater liquidity to local markets, and the criteria for index inclusion involves economic development, size and liquidity requirements, as well as market accessibility factors. Africa is the continent to watch out for, according to precious metals experts. Additionally, the current economic landscape, emerging market opportunities, and Dubai's significant role in facilitating trade for multi-commodities and precious metals, particularly gold, were among the highlights of the second annual Dubai Precious Metals Conference today. At the event, His Excellency Saeed Al-Shamsi, the Assistant Foreign Minister for International Organisations, further stressed the importance of Dubai, as well as the UAE, in trading between East and West. Ahmed bin Sulayem, the executive chairman of the DMCC, said over 20% of the world's physical gold flows through Dubai at present, and they have seen tremendous growth in all aspects. Through this platform, he says, more than 340 global players from over 20 countries will gain better understanding of present as well as up-and-coming trends worldwide. Among them is the potential rise of Africa as both a producer and consumer.
Yesterday on the Financial Times, there's a statement from Mugabe and Zimbabwe that Dubai saved Zimbabwe as far as their minerals and all that. And that's I can't even say that's a compliment. That is a miracle. If somebody said that would happen in the future, we'd all be laughing. But it did happen, and we're moving on, and we'll take full advantage. And that is part of a track record. I can get 20 awards, but that statement just says it all. It speaks volumes. The question of it developing is really depending on them. Before the global recession, I actually personally felt more challenges. Right after the recession, things were much simpler for me and DMCC to attract businesses and doing business in Dubai because there's so much property and fair prices and better choices and all that, and JLT is complete. It was our best years. 2007, 700 something companies. 2011, double, and 2012, 2,033 companies. 94% of which are new to the United Arab Emirates. This brings the value addition to the GDP of the UAE just for 2012, and this is conservatively speaking around $10 billion.
At present, China remains the largest producer and consumer of gold, while the countries such as the US and India are among the major consumers. Event organisers say they aim to encourage more business by promoting best practices, which will ensure trading with confidence. In the past decade, the DMCC has developed a solid financial and physical infrastructure that has contributed to growth in the sector.
Dubai's trade in bullion in 2011 was about $56 billion, I beg your pardon. 2012 was $70 billion. So you can see that Dubai's physical gold trade is growing exponentially. Large part of Dubai's customer base is India, China, the GCC and further beyond. So really, that's what makes this conference so important, because you have participants from 340 countries who want to understand the why of the Dubai market and what they can do over here and how they can participate in this market.
Dubai Islamic Bank has announced that it has repaid 3.8 billion dirhams back to the Ministry of Finance ahead of maturity. Dubai Islamic Bank's Tier 2 fund repayment comes off the back of the bank raising 1 billion dirhams in Tier 1 capital eligible issuance last month. Officials were quoted as saying that DIB's recent $1 billion issuance has pushed the bank's Tier 1 capital ratio from 13.9% to 18.7%, based on the year-end 2012 balance sheet. Recent data from Arkham Capital shows that over half of the 42 billion dirhams lent to the UAE banking sector for the period has started to be paid back ahead of the 2016 deadline. His Highness Sheikh Sultan bin Mohammed bin Sultan Al Kazmi, the Crown Prince and Deputy Ruler of Sharjah, inaugurated the Arabian Automobile's new Sharjah facility today, the largest of its network. The new facility is located on Mohammed bin Zayed Road in Sharjah, which officials say is a significant contributor to Arabian Automobile's growth strategy for the Nissan, Infiniti and Renault brands in Dubai and the Northern Emirates. It is Arabian Automobile's third in the region, after the Al Khan and Al Wata areas, offering 70,000 square feet of floor space and a capacity for over 40 display cars in the Nissan and Renault showrooms. Additionally, this is supported by 14,000 square feet of service facilities. The event also witnessed the opening of the region's first HIQ facility, a fast fit service operation delivering while you wait maintenance for all makes of vehicle.
Today, His Highness the Crown Prince, he graciously said that there will be within a reasonable time that there will be a big market. So this is opportunity for us. We are in the auto hub and we are well connected with our customers. The performance of Arabian Automobile Company in its three leading brands, Nissan, Infiniti and the Renault, has fared well in the first quarter. Our growth is faster than the market growth. We grew by double digit. We are in the 25% growth. So the growth that we have achieved in the first quarter is a proof that the growth in the coming years toward the end, it will not be less than the 25.